This video is an update to my game winning portfolio, and also I'm going to touch a little bit about what's been going on in the market this week. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check my channel out. If you like any of the content in this video, please hit that like button, subscribe to the page, and come back and see me. This video, I will be going over my personal portfolio, part 2. It's been about a month since I last showed you guys my portfolio, so we are going to dive right into it. Okay guys, this is the same Robinhood account that I had in my game winning portfolio video. Same holdings, yes. I still have Robinhood, even though what they're doing right now in the market, I don't agree with. They are doing some very shady things in the market, and that by itself, I can talk about in a whole nother video, but just briefly what they were doing is Robinhood did stop people from buying certain stocks this week that just passed. And I was one of them. I was looking into buying shares of GameStop myself, and they stopped people from buying it and put that you can only sell on their platform. So they kind of force people to either sell their stock or just hold. That's not how the stock market is supposed to work. But they did this on their brokerage. So yeah, I kind of lost a little bit of trust in Robinhood. I was big on Robinhood, but starting to see their true colors. I was waiting to transfer over to Merrill Edge, but of course they give you benefits once your account is a certain amount. If your account is $20,000, they will give you $100 for transferring over to them. And if it's higher than that, it's perks for just how high it was going to be. So my plan was build up my account in Robinhood and then transfer over. With the recent events that transpired, I might have to expedite that plan. I just need to figure out where the best bang for my buck is. Because if you guys don't know, Webull is almost just like Robinhood, but they don't have as many cryptos as Robinhood. Like you can't buy Dogecoin on Webull. This is something I'm looking into myself. So right now I'm good because of my trading style. How I'm trading, I'm a long-term investor, so I'm not really too much affected by what they were doing because I rarely get in and out of stocks. I was really for the calls on what was going on in the market, and I was gonna get in on some of the trades that Wallstreetbets had put out. Wallstreetbets, if you guys don't know, is a group on Reddit of investors, and recently they have been putting their money together per se, raising money for certain companies that they believe in, such as GameStop and AMC. Part of it is because they don't want the companies to go out of business. The other part is they won't want Wall Street to make money off one of their favorite companies going out of business. And of course, the last part is they're trying to make money. So they were betting against these big hedge funds. And the presence of this Reddit group is so deep. Wednesday came and this group was telling everybody that we're gonna go through and buy up shares of GameStop. There was a post posted Wednesday morning, well before the market opened, saying that they were gonna do this. By the time the market opened, around about 9:30, 100,000 people had commented on that post, buying, holding, buying. So of course it was more, but before the market opened, they had a collection of people going into this stock, and it made the stock do flips. I mean, it pushed it. Typically, you only see that type of push when a millionaire goes through and puts money in or takes money out. Only millionaires usually have this type of power, or hedge funds who basically control the millionaire's money, and their job is to make millionaires money. You know, if you want to be part of a hedge fund, you got to have a certain amount of capital for them to even work with your trading account. The everyday people move the market as if they were millionaires, billionaires. They moved the market that heavy because they joined together. That was amazing to watch. It was. So when I seen it on Wednesday, I was like, okay, I might put a little bit of money in one of these stocks myself to see what it do. I wasn't going to put a lot. It was just going to be something like $50, $100 maybe, and see what it do. But Robinhood stopped buyers from being able to get in on these stocks. I was one of those buyers. I was looking to buy something that Thursday because I was like, I seen it, how it happened Wednesday, and I was like, I'm going to get into it too. I want to be part of this cause because it's pretty amazing that everyday people can move the market like that because they have come together. That was amazing. That was amazing. And Wall Street wasn't prepared for that. They really weren't. And neither was Robinhood, apparently. So Robinhood closed it out and then let people buy. That is a prime example of market manipulation. And Robinhood should be for the little guy, but they kind of showing that they are really for whoever has the most money. Millionaires, billionaires, and I'm not sure if they really for the little guy, but they will get what they deserve. And I just need to figure out which brokerage I want to go to. A lot of brokerages, they do have all the securities I have, but I want to be able to trade securities and cryptos in the same place. It seems like we were the only one that can do that. You can't buy cryptocurrencies on Merrill and Charles Schwab, the big name boys. You can't do that. So it's just something that I got to figure out myself. But yeah, that's a little spill. We're not going to get into all of that. There's going to be another video coming out, and we're going to talk about all of that and maybe even have another investor's opinion on that in the next video. All right, so that was long, right? Let's get back to my portfolio. All right, so in my portfolio, right now I'm sitting at 17 growth. My portfolio, I have grown, and my dollar amount is roughly $13,700. In my last video, I was only at $11,733 in my game winning portfolio video. So I have grown 17.59%. And again, I've only been trading for 7 months now, about 7 months now. And this is stellar growth from what I'm building my portfolio for. You don't see my portfolio doing any crazy growth like 100% because I have my portfolio spread out and I'm heavily involved in dividend stocks too. So this portfolio is kind of a dividend and growth. If I get extra 20% growth on my account by the end of the year, I'm happy because I got that 20% and I got a lot of dividends from some of the stocks that I own. And I'm going to be doing a dividend video too on that to show you guys how much I do make off dividends. But we're going to go ahead and start going down these stocks. I got it on percentage gain. So SPHD, I did buy 2 more shares of SPHD, but it has went down. The market has been slightly crashing, but that is nothing to be wary of. If anything, if you got extra money, you should probably buy some of those stocks that you really like that are at a discounted price right now. Because a market crash is most of the time is always temporary. Even the crash that happened last year, it was temporary. Everything kind of bounced back. So SPHD, I did buy 2 more shares. I think last video I had 20. I bought 2 more shares of SPHD, but the percentage has went down again. So that means it's at a discounted price. So it went down 2%, but that isn't much. And SPHD did give me a good amount of dividends. As you see, I got 2.4 partial shares. That's all from dividends. Eventually, SPHD will be able to buy 1 share when it gives me dividends, which is pretty good. I wanted the stock to work for me and add to the position. TMFC, the Motley Fool Index, I did add 3 to them. The percentage has went down 2% since the last video. Cyber has been doing great. I didn't add anything to cyber, but the percentage has increased around about 6% because the cyber market is doing great. You know, the tech market, that's still a good ETF if you guys want to look into that. FHLC, that's a healthcare ETF, and of course, because of all the things that's going on with COVID shots and all of that good stuff, that did increase 3%. And Nerd increased 11%, and I didn't buy any more of those. But you guys see that at the top, I want to point out that at the top, my top holdings are ETFs, and I have a good number of them. Again, ETFs will keep you safe during something like a crash because they are managed by others. So I do want at least like 25% of my portfolio, 25 if not 50% of my portfolio in ETFs. That's my goal, just in case, me being so new, and you guys should take note of this too. Me being so new, I've been trading for 7 months. I definitely know what I'm doing, but just in case something happens that I didn't know was going to happen because my lack of experience, only 7 months, I use the ETFs. The ETFs are my fallback, just in case I didn't catch something quick enough. My ETFs should still be good. My money should still be safe because I'm in ETFs that are managed by quote unquote professional traders. So ETFs are something good. And as you see, I got ETFs in almost every sector. I got ETFs in dividends sector. That's what SPHD is. ETF in the growth sector. That's what TMFC is, the Motley Fool Index. ETF in the tech sector. That's what cyber is. An ETF in the healthcare sector. That's what FHLC is. And an ETF in the gaming sector. That's what Nerd is. So I got ETFs that have my back just in case some of the decisions I made were not the best decisions. You get what I'm saying? ETFs are made for that. ETFs are supposed to be hands-free trading. If you guys want a balanced portfolio, you can balance your portfolio with ETFs. If I wanted to, and I do have another account, in one of my accounts, I have a good amount in only ETFs and REITs. I'm letting that portfolio work for itself as it pertains to growth and dividends. I only have like 5 stocks in that portfolio, and it's all ETFs and REITs because I'm letting it work. That's a good idea to have too. But we dealing with this portfolio, so stick with me now. Alright. AMD, you guys know what AMD is. And AMD is down for me 14%. Apple is up for me 2%. Microsoft is up for me 2%. AYX, they are down for me 1%. Cloudera, this was one that I said was risky because it was a low price stock, but it was a cloud-based stock. So I bought in, and I bought 10 shares when it was low. In my last video, it was negative, but it turned out Cloudera was a great decision. I'm up 17% in Cloudera. I bought them when they were far in the red, but it did take a few months for them to finally come out and me to get this 17%. But again, they were one of my risky growth plays, and it really helped out. CRSR, this is one of the ones I did a video on, and it's a growth stock. I did a video on why that was a hot growth stock. It still is. It honestly hasn't went anywhere. It has been going up and down. It has been going up to like $40-something. It was up at $50-something one time. But of course, day traders are trading it and swinging it. So as soon as it gets up that high, if you know the rules of a day trader, when a stock hits its high, its peak, you sell it. When it gets to that 52-week high, you sell it, and then it go back down, and then you repeat. You wash and repeat. That's what the traders are doing with Corsair Gaming. So please don't think that is not a good buy. It's a great buy, but they are swing trading, and it's still at the same price, around the same price where I first got in at. I do want to point out, I did buy 2 more shares of this. It dipped down, and I bought a couple more to average down. If you don't know, averaging down means when a stock is lower than the price that you bought it for, and you go in and buy some more, it makes your average go down on that stock. So that's what averaging down is. when the market starts to crash a little like this, it's the perfect time to go in and buy those companies that you believe in and want to get at a discounted price, because when they come back, the bounce back is going to be real. NOC, that's Northrop Grumman. I'm down 4% on that, but I'm still bullish on that. It's still a good investment. I still believe in that company and what they do. HEI, HECO, I'm down 14% in HEI, but they are the airline field, and I'm down in HECO, Southwest, and Delta. Of course, if you guys know, they are all tied together because they deal with the airlines, but I do think it's just temporary, and they're down temporary, and they'll be back. Lowe's, I'm up 10% in Lowe's from my last video. Lowe's is still a good company. You can't go wrong. They give dividends, and they're a decent company to be in. Darren Restaurants, I'm down like 2% since the last video. I didn't add any more positions to that. Cisco, I'm down 16%, but I did go in and average down. I bought 2 more shares of Cisco, and Cisco is a great company too. Pay good dividends, but Cisco, Coke, Darren Restaurants, they all kind of tied together because they are in that restaurant sector. I did the same with Coca-Cola. I'm down 6% in Coke, but I did go through and buy 4 more shares of Coke. And again, this sector gives you great dividends. So yeah, I'm down, but I did receive money from my dividends in these accounts. And typically, something to point out too, when a company does issue dividends, their stock price tends to dip down for just a moment, and then it comes back. Some traders like to go through and buy a stock right when it does this and dip, and then get out of it when it comes back up. The day traders like to do that when they are issuing dividends. Bam, Brookfield, I'm down in them 6%, but again, they are still a good company. EPRT, they are one of my REITs that I'm banking on. I did go through and add 3. I added 3 to my portfolio since the last video, and it was pretty good to see that EPRT is almost to the point that every time they give me a dividend, I buy half of a share. Eventually, it's going to get to the point where I buy 1 full share. It's going to start buying into that REIT for itself. It's going to really be making money for me. Nova, I'm down like 15%, but Nova is one of the ones to watch. Nova is one of the ones to watch. The government is backing Nova, and I used to say Robinhood is backing them because they say it's 100% buy. So that means somebody wants you to buy it. And with it down 15%, it's at a hell of a discount right now. Nova, I was watching Nova shoot up to like $52, $51. But right now it's down and it's at a great discounted price. So is CRISPR. CRISPR, I'm down like 4% on CRISPR. And I did go through and buy 1 more share of CRISPR. But CRISPR is one of the ones to watch. A lot of people are banking on CRISPR because CRISPR is a great company. If you look at some of the ARK ETFs, ARK, the one that's booming, they invested, they got money in CRISPR too. I think it's one of their top 10 holdings. So yeah, CRISPR, check them out. And especially while they're low like this. And then TPYG, that was one of the ones I did a video on too. And it's up 4%, 4.66%. I did buy 4 of those, and I'm looking to buy more of them when I get the opportunity. But as you guys see, I don't bank too much on the exponential growth because that's typically not what I go out and seek for my portfolio. But TPYG, I'm going to be investing in them for a while. And so, and the same is with CRSR, Corsair Gaming. And then the free stock, and yes, you know I had to do it. Your boy had to do it. I had to go through and buy AMC. I wanted to buy it Thursday. Thank you, Robinhood. But I wanted to buy it Thursday, but I got in on it Friday, bought them, and we're going to see what they do. Nobody was really going to the movies right now because of COVID. It's a dime business, but AMC has a little bit of sentimental value, you know. Everybody like going to the movies. But Wallstreetbets, they're betting on GameStop and AMC right now. So I just bought 4 shares. If you didn't know, that's about $52. I think I bought them 4 shares at $52. And I got 3 shares in my Webull account just to see what it do. Typically, I don't go after these quick growth stocks because I like to have my balanced portfolio. I don't like to off-balance my portfolio like that. But yeah, I'm in it. We're gonna see what it do. Also, I do want to point out it is tax time, and I'm not a tax advisor. I'm not a financial advisor. But I do want to point out is, for you guys that don't know, that are trading in like a simple Robinhood account, and it's not a IRA, a retirement account, you do know that each time that you get into a company and then you sell it, each transaction, once you sell it, that's a taxable transaction. So let's say you made $100 off that transaction, and you just pull that $100 out. Pull that $100 out after you make your money off of it, and you spend it. It's gone. You do know you got to pay taxes on that, right? And depending on what tax bracket you fall at, I just always like to assume the worst, that I'm gonna make a lot. The worst is actually the best, but assuming I'm gonna make a lot of money off stocks and I'm gonna be killing the game, so I'm put myself in that 35% percentile for being taxed. So if you had that $100, only $65 of that was yours. $35 you got to pay Uncle Sam. And again, that just do that after you made $3,000, $4,000, and you just went and spent it, and then think about that was taxable income. Watch that. A lot of people make this money fast, and if they don't remember that they do have to pay taxes on that, they might be upset when it comes time to file taxes that you owe a certain amount of money back because you were making money off stocks, because you was going in and you was selling them. My style, I'm long-term investing, so I haven't sold a single stock since I opened my account. I haven't sold a single stock. No, I take that back. I'm lying. I sold an ETF. I was in the SPY-D, and I sold it because I wanted to put money into SPHD instead of SPY-D. So I sold that one. I think I sold it for a loss, so I don't think it really hurts me. I sold it for a loss, and I switched over. But when you get into making money quickly off these stocks, just remember, if you're not in a retirement account, you're gonna have to pay money on those. So, not a financial advisor, not a tax professional, but just remember that. Something to remember. Okay, guys, and we're gonna look at the last bit is Bitcoin and Ethereum. Bitcoin, last video, I was sitting around 96%. Now I'm at 191%. So yeah, I had about a 95% growth in Bitcoin. Watch it. Ethereum, last video I had 63%, and I'm at 90%. So yeah, about 27% growth on that. And I did add a little bit more to Ethereum and Bitcoin, just little. It wasn't anything to be crazy about, just a little 20 here, 10 there. So Bitcoin jumping out the gym for me. Bitcoin is jumping out the gym. And I do want to go down this one good time. I got 70% in stocks, 16% in crypto, and 14% in ETFs. I'm going to be upping my percentage in my ETFs here shortly. This is how I'm balancing my portfolio out. You go down, I got 35% in tech, 23% in manufacturing, 17% in consumer goods, 14% in finance, 4% in hospitality, 3% in healthcare, 3% in water and energy, and less than 1% in business. So I do like to balance out the portfolio. So say the tech industry had a big hit. Okay, that was just the tech industry. It might go down, but one of these other industries might go up while the tech industry goes down. So just make sure that you keep a balanced portfolio and balance your portfolio out. So that's why I'm sitting that in my game winning portfolio. Okay guys, so that was my game winning portfolio part 2. I will be coming back each month, show you guys an update of what I am buying and what I did buy and how my portfolio is going. I hope my portfolio give you guys some ideas on how to balance out your own portfolio, how to spread yourself out. We briefly touched on what was going on in the market this week. I can talk about that topic for days. That topic is for a video all by itself, and be on the lookout for that video. If you like any of the content in this video, please hit that like button. Again, it really helps me out with the YouTube algorithm. Subscribe to the page and come back and see me. I got plenty more to talk about. All right. Thanks.